morning. But how will all this actually impact our Indian markets? What are we watching out for this time? In our Power Press segment, we do have our researchers joining in with us to set you all up for the day. And Hormaz as well as Sudarshan, very good morning to you all. Hormaz, let me start with you. What are we watching out for in terms of the market cues, key important levels, events that we're keeping an eye out on?
Good morning, Vinny. Another truncated week lies at the store, but a start seems to be under pressure because the GIFT Nifty is indicating another gap down start for our own markets. Remember, we have 2 days of global cues to digest, and on both days, the global cues have been weak, so we'll have to figure that in the start of today's trading session. For the week, it was another loss for the Nifty, another 2.5% cut on the index, a 2.5% cut on the Nifty Bank as well, and now the Nifty has declined in 6 out of the last 7 weeks, and a 6th day of losses as well in Thursday's trading session. Well, major factors, of course, it's all known that there's been a disappointing earnings season which finally came to an end on Thursday. FI selling continues, and now an adverse inflation print also which has dashed hopes of a rate cut from the Reserve Bank of India, and that is showing up in the sectoral indices as well, right? Most of the sectoral indices, be it auto, FMCG, PSU bank index, most of them are down anywhere between 15 to 20% from their respective record highs, while the Nifty itself is down over 10% from its peak. Now, is it more volatility in store? Yes, it is, because the global cues have now turned adverse as well, because until now the global cues were slightly positive. The US market sell-off continued. The China economy is on the mend. So important levels to watch will be 23,500 on the Nifty, 50,000 on the Nifty Bank, and another truncated week lies in store because of the Maharashtra elections. But for now, the GIFT Nifty pointing to a gap down start for our own markets.
Okay, gap down start is what we're watching out for the Indian markets. Thanks so much for that, Hormaz. Let's look at which are the stocks that we should be keeping on our radar today. We do have Delivery that reported its Q2 numbers, good set of numbers coming in from the company. When you're looking at it, revenue growth of around 12.8%. We also had the EBITDA that turned profitable this time, and profits that were positive for the second consecutive quarter. So Delivery in focus. On the back of earnings, we have Honasa Consumers in focus, weak set of numbers, revenue down 6.9%. EBITDA loss is what the company reported this time of around 30 crores versus an EBITDA of around 40 crores last year. All cargo logistics, good revenue growth of around 30%. Freight increase that came in led by the freight increase, as well as margins on this other hand. We saw a bit of a decline there. So let's keep an eye out on all cargo logistics. Hero Motor, decent set of numbers, inline set of numbers from the company. Profit seeing a growth of around 14%, revenue of around 11% growth. Margins, 40 basis point expansion there, 14.5% is what the margins came in at. Grasim Industries, that's the one also in focus on the back of its numbers. Revenues were up by 18.3%. Margins came in at 4.27% versus 9.22%. So clear pressure coming in on the margin front. Mainly, there was a lot of pressure on the EBITDA of the chemical side business, which was much lower. So that is something that was seeing a bit of an impact, as well as higher losses in the new business is something that one was watching out for. Crompton, that's also in focus on the back of its numbers, 28% rise in terms of profits, revenue seeing an increase of around 6.4%. Also, we do have Glenmark Pharma, that's in focus, revenue growth of 7.6%, as well as margins seeing a bit of an expansion. Aluminium stocks in focus after China has announced withdrawal of its export tax rebate, so keep an eye out on that. And IGL in focus after the company has announced 20% reduction in gas by GAIL. This is going to be effect from November 16th, impacting the profitability. So keeping an eye out on all these stocks today. But let's move on. And finally, we have Sudarshan also, who's here to tell us what are the cues in the world of FNO.
Morning, Vinny. So on Friday, we saw Sensex Nifty closing with minor cuts, but nevertheless, it was a close in the red for 6 consecutive days. And for today, also, GIFT Nifty tracking 2 days of global cues is indicating a sharp downtick start for our market. Talking about institutional flows, FIs continue to sell. On Friday, we saw FIs selling almost 19,000 crore in the 1,900 crore in the cash market, while DIs have bought almost 2,500 crore. Even in the index futures, we saw FIs selling more than 400 crore. And at the same time, they have added long contracts of more than 7,000, but in front of that, they have added short contracts as well, an addition in the short contracts of almost 16,000. And with this long exposure for FIs now reduced to 23%, just good parties, now it looks in the oversold zone. So I wouldn't be surprised if there is a recovery in the market intraday. Talking about the client side, total long contracts stand at 2.91 lakhs and exposure stands at 68%. On the option front, on the call side, 23,600 call has seen addition of 22 lakh shares and 23,700 call has seen addition of almost 15 lakh shares with premium at 78. On the put side, 23,400 put has seen addition of more than 10 lakh shares and premium is 87. Now, important levels for Nifty, support is now seen somewhere around 23,460, that is around the intraday low of 23,480 that we saw on Friday, and resistance is now 23,600. Two stocks that can be in focus. First, IGL, fresh shorts were building up. Now there is a news flow as well. And second is Apollo Tyres. After earnings, we are seeing fresh longs were building up. So keep an eye on these two stocks as well.
Okay, Sudarshan, thank you so much for that. But on that